Mic check, mic check. What's going on, everyone? This is Jordan with Conquer the Markets. Really happy to be with you on this Monday with you all. We have a strong session today, a strong, let's say, meetup on Friday. Summit team getting together to talk with the dev team, looking at some advanced designs, trying to focus where we could best put our time, energy, and talents, bringing that back down towards the hive mind and throughout all of CTM. Really looking forward to that. Today, I want to talk about what's going on with the markets right now as this week kicks off and begin. Right now, the markets green this morning seem to be looking forward to the events tomorrow. Biden meeting with House Leader McCarthy, and hopefully there'll be some type of resolution to the debt ceiling. Maybe unlikely. Right now, the markets here look to be hoping that that will be the case, but politics are politics. We're going to take a look at the technicals on the NASDAQ, the S&P 500. We're going to look at the dollar. We'll take a peek at what's going on with oil, gold, and silver, looking healthy as well. We'll look at them, and then we're really going to get into what's going on Bitcoin and also Ethereum. Ethereum is pretty close. You see that little right there, that confluence of resistance, the sloping down red line, the upward sloping line above it. If we get above that, Ethereum will be triggering here to the long side on the buy side. Don't forget, we are in an uptrend. We are in an uptrend. Not only in an uptrend, that looks to me like, I could say that looks like a bit of a wedge forming. That looks like a very nice, healthy wedge. Downward sloping wedges in an uptrend could lead to big continuations to the upside. We'll see if we get the entry. Currently now about $28, $30 below where that entry price would be 7.5 hours from now. But we'll be looking at that. I want to start off with looking before we get into Bitcoin, before we get into, Micron, before we get into Ethereum and the rest of it. I want to take a look at what's going on the equity markets. NASDAQ over here continues to look good and continues to climb what looks to be the wall of worry. Everyone hoping that we have some type of settlement of the debt ceiling. And most people believe that we will, by the way. If we don't, the bullish case for the equity markets for Bitcoin is likely that there is some type of default, because the only response to some type of default would be quantitative easing, and that would be extremely bullish on the risk markets. We'll probably talk about that a little more tomorrow. Start over here with the S&P 500, and we're in a very, let's say, I was going to say we're in a very bullish structure. That's not true at all. We are in an overall downtrend. In that downtrend thus far, we are here forming what looks like a triangle. You can see it over here. And what that means is if we break out on the upside over here, that offers opportunity for the next leg up. Currently, we're consolidating underneath the resistance. That's also bullish. And the red line is where you watch out for if things were to break down. We have this purple line over here, and that just shows a sell impulse in what is an uptrend. And since then, we are consolidating nice. A lot of people are able to see that this pattern looks potentially like a diamond. I'm going to draw it two ways. First, I'm going to draw it a little bit tighter, right? And this could often be a reversal pattern, so to watch out for, or it could be a little bit extended. I could also say that that looks to me like the same pattern, just drawn a different way. And if we were to see a breakdown, that could be a reversal. Now, tomorrow, and I think this is the most important way to start off today's session, tomorrow we have House Speaker McCarthy meeting with President Biden. That meeting was pushed off, right? They were supposed to meet last week. At the end of last week, the president decided that, you know what, it wasn't the right time, wanted to push that back, and that's expected to be tomorrow. Some people are talking this up as if it's the last chance for any type of common ground to avoid a default. We know that that Janet Yellen told us that June the 1st is the deadline that the Treasury basically would be depleted, their cash balance, and that at that point, be moving towards default. So I guess entitlements will go first. Forget mom and dad out there, living on fixed income. I'm sorry, we're not going to be able to meet your payments or whatever might happen. It would be ugly. Jamie Dimon has said that it could be a catastrophe. I said to you that's probably the most bullish case for risk assets, in so much as that outside of allowing some type of system collapse, we're going to have to come in, or the Fed's going to have to come in, and because yields are going to skyrocket if the US were to default. That means the whole system would be on the verge of blowing up. Likely they're going to come to some type of resolution. The thing is, how soon? Are the markets, if it doesn't happen tomorrow, I don't believe them that June 1st is the deadline. I don't believe them at all personally. Now, that's just my own speculation. That's just my own opinion. I don't trust them. I don't believe them. And they probably have enough funds that could be monkeyed around and moved around to get through probably a good part of the summer. Probably. But they're trying to put, I would believe, a little bit of pressure on these politicians so that they could come to some type of agreement and then we could move on. What does that look like? So if there is no deal tomorrow and the markets believe the timeline that's being set forth by Janet Yellen, at that point, the markets may begin to sell off. I would not be surprised if the markets decided that they actually wanted to put some type of pressure out on the powers that be. So I'm looking out for that. I'm concerned about that. We're going to be looking at what looks and appears to be perhaps even some bullish continuation patterns setting up. And we're also going to look at, see lower highs over here. If we were to take out this low over here, that would be a very bearish structure. We'll look at the pattern tomorrow that was setting up. We could go either way. I talked about on the Ethereum a descending wedge that was forming, and you could also make the case that that's not only occurring here on Bitcoin, but that was a liquidity grab. We're going to get into the TA very soon. And if that's the case, and here's the trend line breaking above it, that sets off, a chance at some upward direction of a movement. We are still in an uptrend, but it calls for extreme caution. No, that would be terrible. I'm playing it forward. So the initial result would be horrific, and then the Federal Reserve would have no choice at the end. If the politicians break everything, the Federal Reserve has to come in and make sure that the music's playing. There would have to be an enormous injection of liquidity, and that would be bullish for risk assets. And for how long? Obviously, no one knows, because then all of a sudden the concern might be, wait, is that going to be inflationary again? And then, are yields going to respond and stay elevated because of that? Or is it going to go back to the old, well, between 2008 and when QE started, that was not inflationary CPI. That was inflationary asset prices. As long as the government doesn't jump in here with any type of direct to consumer, but, putting money into your bank account, lending businesses money and then forgiving it, at that point in time, we might not see, it might just be asset inflationary. So I was just jumping forward. There's like all this stuff in my head that I want to get out to you all as we get going on Monday. And I was just kind of like assuming that you're following my line of thought, which is absolutely ridiculous. We'll take it fast and we'll take it slow. We'll make sure that we cover it all. So my assumption here is that tomorrow they don't come to any type of resolution. If they don't tomorrow, because could you imagine, like, what are some of the things on the table? So what the Republicans are asking for here, or their key demands, is a clawback of unspent COVID-19 funds, which, by the way, seems entirely reasonable to me. Like, okay, we allotted a certain amount of money in our budgeting for this crisis. Now the crisis was deemed to be over last week, and we have all these unspent funds. Well, if there's no more crisis, we have unspent funds to kind of head and take that out. Makes sense to me, but what do I know? Impose tougher work requirements for recipients of food stamps and other government aid. I can't imagine that that one's going to go over well when we're coming into an election and you want to make sure to do your best to go ahead and buy constituents. Halt Biden's plan to forgive up to 20K in student loans. Yeah, I don't think they're going to go with that one either. And the courts probably will. And end many landmark renewable energy tax breaks that Biden just signed. This puts the president in a really tough bind. I mean, number one, that seems reasonable to me, but I'm sure that they see that as a lot of money that they want to use for other things. But the 2, 3, and 4, that makes like the other side of the aisle, I think, look bad. I could see why there's some stumbling here and trouble. And I don't think that they're in a rush to come to any type of conclusion. I think the market is going to be what forces them to do it. And we might have a little bit of a panic to kind of get them to start talking. But once they do, assuming this is all resolved without anything blowing up, and we don't know that, it could. And everyone says, well, the U.S. can't default and the U.S. won't default. And how do you know? I do not know, and I do not take anything for granted. I think it was Alan Greenspan who said that, well, the U.S. government will never default because at the end of the day, they could just go ahead and print money. How much that will be worth is another thing. But at the conspiracy theorist in me also wonders, yeah, are they looking to blow things up? I don't know. Trust no one. Make sure we're prepared for all outcomes. One of those outcomes needs to be that not only is like the worst happen and then QE ensues, but what happens if the markets just continue climbing a wall of worry? Don't forget, interest rates are coming to a pause, and at that point in time in the past, we have seen risk assets, even last cycle, perform very well. We don't know. We need to stay in front of it and follow the technicals. But once they do come to some type of resolution of this, we could all go back to worrying about normal things like inflation and geopolitics and also the economy. The economy is another thing that we're going to have to be talking about and worrying about. We saw today New York Empire State Manufacturing crashing down well below the forecast. This is the worst reading since April 2020. Not a good look, not a good sign. Tomorrow we have retail sales, talking about the consumer over here. Credit card data is revealing the first drop in household spending in 2 years as upper income wages tumbled. Why that matters is because upper income does carry a lot of weight of the economy. Unemployment benefits soar. So tomorrow we also get a taste. Today we got a taste of the manufacturing. Not a good look. We're going to find out if the U.S. consumer remains in there tomorrow. There's an old saying, as the U.S. consumer goes, so does the economy. People talk about, there's a famous chart going around about that the markets are not the economy and how usually the markets bottom before the economy does. I think what's important in there is the timing of it all, because usually, we haven't entered recession, and there is the whole thought out there that even though we've just undergone the tightening cycle in 40 or so years, that the Fed has gone ahead and engineered a soft landing. And if indeed they have engineered a soft landing, and you're going to see deflationary forces continue to come off, the job market is going to remain strong, even if it gets a little bit softer. And we're going to kind of head and be able to just land it perfectly. That it could happen. That's something that you all need to think about and consider, but it's not looking that way. But anyway, we got a lot of central bankers all week. We saw even today, we saw Fed's Bostic go out there, and he was setting, I do believe, the stage for that pause. He's saying that there's no plans for the Federal Reserve to cut rates at all in 2023. So that means to me, or that sounds like to me, a little bit of we're moving towards a pause, but we're going to make sure we continue that verbal tightening over there. And, basically, we're going to cut rates if we're forced to cut rates. but we have no intentions of doing that. We got a lot of central bank activity this whole week over here, including on Friday, ending with Jerome Powell, the man himself. You also have ECB's Christine Lagarde. So it is central bank week after we see retail sales out of the way. And then tomorrow, the event of the week is also Biden, meeting with McCarthy to see if they're able to come to any type of all of a sudden friendly arrangement over here, which is possible. If that were to happen, I would expect we see risk assets act really appropriate. That would be my guess over there. And then we talked about geopolitical things and we talked about inflation worries. I'm bringing up the economy. And then we also have, of course, once the debt ceiling is resolved, we have that added pressure on the markets as the U.S. Treasury will be looking to go ahead and restack its coffers. That's going to cause a double tightening to occur as far as monetary conditions. And maybe the markets will be able to continue to climb that wall of worry. Maybe there is enough demand out there that they'll be able to raise. I'm not sure what the amount they're looking to raise. And in the timeline, I do believe that it is around $1.2 trillion. I've heard, I was surprised. I thought that it might be something like $500-600 billion. It seems to be double what my expectations were. And I believe that they're looking to do that by the end of 2023. Either way, we're going up. And then we have, don't forget, we talked about the Treasury looking to the buybacks in 2024. So we're already moving towards some form of yield curve control coming up, but I think 6 months is a long time in the markets. I think 3 months right now is a very long time in the markets. I think that right now, the next 90 days is, let's see if we could get through it and how we get through it. We got to follow the liquidity on both sides, and that includes the China injecting liquidity, looking at what is $3.6 billion, 25 billion won, and you can see in relation over here, it's waning and a rather small injection. You can see the bigger injections over here, and that's when we saw global liquidity tick up in a nice way over here. That was when China was over here injecting that money. And right now there wasn't further injections last month, but they do seem to be waning. They do seem a lot smaller. And I'm not sure. Well, we could just look at our liquidity. Liquidity continues to be thus far continuing to drop. Don't forget, the U.S. Treasury is out there doing extraordinary measures, counteracting quantitative tightening. The balance sheet went nowhere. You can see that flattening out. So are they worried about the debt ceiling? I don't know. This is just pure, like, I don't know. That looks like it's flatlining to me, though, the balance sheet. So, I'm just, maybe they're worried. And right now they're kind of like pausing the runoff of the balance sheet over there. We have to keep track of it. And I'm just trying to look when we move towards a taper and a pause, because sometimes it appears to be going, it looks like it's flatlining to me. Here's in 2018 when they were drawing it down, and it does look like it's flatlining to me. So maybe they're worried. I don't know. Anyway, and we do see liquidity over here continuing to drop. And again, we're just going to look at things from all different sides. I'm not like, I was very clear when that global liquidity was rising. I was also ahead of it talking about when it was beginning to go the other direction. And if China's over here and China, their economy continues to slow down, their recovery is not going exactly as planned. And if at any point in time China needs to be more supportive, then we could see something like that we saw into that area between October, November through January of 2022 and 2023. And if China really gets on the bid, that's something that could send global liquidity back the other way. But I don't think that, $3.6 billion is really doing it. And you could see that in the past, we saw April was a massive down move in 2022. That seems to be, proportional to the amount of liquidity they just added. So again, we're just looking at things from all sides, and including all sides, that we are seeing price consolidate in an uptrend over the last few months. And I could see that triangle forming over here. That does mean less and less sellers, as like we know that smart money, quote unquote smart money, is positioned right now overly short, right? The most since 2008. It doesn't make them wrong, but maybe there's just no one left, no one left to sell any further. Well, you got to break above the ceiling. You got to break above the resistance. And as we're consolidating underneath that resistance, you got to follow the technicals, breaking above 4,200, the psychological number. That could lead to a big move to the upside. And if tomorrow they come out and they say, you know what, we made friends and we have the interests of the American people at heart, and we did raise the debt ceiling, we made some concessions, cut back spending, and we're looking to go ahead and move forward stronger together, I imagine we see a big move up. At any point in time, we get a close above here. That's signaling the next leg up. At the same time, we're aware of the potential ability here to roll over, perhaps even put a scare into the politicians so that they get their ducks in a row. And that's just the look that we've taken at the S&P 500 from different angles. You can see what we were just looking at. The red line is where it starts to get, let's say, a little bit scary. That's just caution, the purple one. That was a sell impulse, but that into resistance. But we are just consolidating neutral since. NASDAQ, very similar. You could see the sell impulse line continues to climb, and it's that slow grind. And that's appropriate terminology right there, slow grind. Paul Tudor Jones. You got to follow those who have a history of being right. Paul Tudor Jones, if you remember, December 2018, the Fed hiked rates, and they didn't say we're moving to a pause. They hiked rates. Paul Tudor Jones gets on CNBC, and he's like, that was a mistake. They shouldn't have hiked there. That will be their last hike of this tightening cycle. And he was right, and risk bottomed, and then a few weeks later, Powell affirmed that, and then that was the pivot to the pause, and risk started to climb, and it was the last hike of the cycle. He was entirely right. Paul Tudor Jones this morning saying two things. By the way, he was also right in this area over here. If we were looking at the Bitcoin, we're looking at the NASDAQ, but bear with me. At some point in this area, Paul Tudor Jones, as the Fed moved towards the taper, he was like, this is not going to be good for Bitcoin. And he was right. And what's he saying today is he's saying, and I was surprised by this, because he said this is not going to be good for Bitcoin. He didn't sell any of his Bitcoin, And let's go ahead and hear, because there's only 2 minutes. Let's hear from Paul himself.
Bitcoin. You came on our air during the early part of the pandemic. I think it was trading at $8,000-$9,000 a coin. And you said, I'm in. And I think you rode it all the way up to 60 some odd $1,000. And we then rode it back down to $15,000, and we're now sitting, I think, somewhere around $27,000.
I've never sat on a horse that long, just so you know.
So what's you're still on the horse, though?
From the beginning, I've always said I want to have a small allocation to it because it's a great tail event. It's the only thing that humans can adjust the supply in. So I'm sticking with it. I'm going to always stick with it as just a small diversification in my portfolio. What do
And it's true. It's small allocation. I believe he has like a 2% allocation to Bitcoin. Nevertheless, Paul is good at timing markets. He saw Bitcoin was in an environment, a macro environment that wasn't conducive to it. He could have lightened up that position and then gone ahead and allocated dollar, build up back a position. He decided that he does not want to give up that hedge, and for good reason. Paul believes that once again, as the Fed is getting ready to finish their rate hiking cycle, the portion of the tightening cycle, that's going to mean that equities are going to end the year higher. He thinks that it's going to be a slow grind. He doesn't think that the macro environment is in any way, shape, or form bullish for equities. He does expect them to end higher on the year. He expects it to be a slow grind, and that is also very interesting. Again, consult those who have a history of getting it right. At the end of the day, follow the technicals. That's how we do it. This is it's not hard to dance through the politics when you're not on either side. When I'm on the side of us, and it's us versus them. As far as I'm concerned, they're on the same side. But I appreciate that. I'm not looking to offend anyone. I'm looking to talk about how these politicians affect the markets, and that makes sure that we're able to stay aside. I mean, why small? I mean, Simon, why I can't answer that. Paul has made billions in the markets, and usually someone his age with that type of wealth. By the way, he's done some great things, including the Robinhood Fund, really helping education, inner city youth. He's probably looking to make sure that he's doing his best to maintain it. I don't know. That's my assumption over there. I'm sure that if he was a younger guy in this environment, his position would be bigger. I think the way that he's going about it is pretty smart, nevertheless. Let's take a look at what's going on with Bitcoin. Bitcoin over here, don't forget, we are continuing to be in an uptrend. We have 3 major repairs in 2023, and now 1 failure. That failure has caused Bitcoin here to come back into a pullback. It's just a small pullback thus far. And I want to look at what's going on a little bit intricate into the price action, leaving it off where we recently left it off. Let me jump back to this over here and add this into here. All right. So the first thing I want you to focus in on is this trend line over here that we added on Friday. And we said upon this entry, he had an entry on Friday with some decent follow through and very quickly wicked up. Now, discretionary traders here, we talked about why you were not able to get short on the breakdown of what we were looking for, the pendant that I'm highlighting, that highlighted bold green line. Talked about why the entry would not have come if you were looking to discretionary trade that until the breakdown of the red line. And then on the breakdown of the red line, you see that we wicked right back up into what we deem to be a channel forming. We went from the pendant to a channel, and that looks to be remaining intact. Right now, price having gone short here, we talked about the first place to look for a stop loss is on this trend line over here. A break above this trend line, which gets you back above both those upward sloping green lines, right? So that you have that resistance above us. Price right now currently testing that resistance, right? So you have still the breakdown, and now you see a retest that's occurring right now. The trade is wrong, I believe, if you get above this trend line over here. We talked about that on the entry on Friday. Great example of how it's never easy. And that's the truth of it. It's never easy, but it's also never about one individual trade. Is that a hammer? For me, it's Oliver. I mean, it's a bit noisy in so much as that it occurred on Friday after the close. I don't know what to say. If that is or isn't. We talked about how it potentially could be. I just want you to point out to you this using that upward sloping. Sorry about that. I don't know where I just went on that. That looks like a descending wedge, right? And we're in an uptrend. And if we break out above it here, that could be sending us towards 34, 35,000, And could this have been a liquidity grab? It could be, but nevertheless, until this line over here breaks, right? The structure here is looking pretty bearish. Breaking above that would not nullify it. That would just be the best place to manage risk off of. At that point, you don't belong short anymore if you took a short down over here. it's the time to get out of the trade. But we still have this upward sloping down trend line of resistance. How did that get pulled down? Hold on 1 second with me. All right. It's Monday, so we got to get like sharp coming into the week. So hold on a second. This is exactly. So this is out of the trade and neutral if you were to break above this trend line right here off of this sell entry over here. Now, this triggers the long getting above this downward sloping trend line. And I'm also mindful of the resistance we have over here at 29,000. Didn't play too much over here, but it's a definite line. I go with the trend line breakout just so you have an idea of awareness. Where Bitcoin goes long is currently right around, let's say, about $650 from here. So about 28,200. 28,200 is going to be just below this one. Interesting. So CTM 2.0 on the 8-hour time frame will be taking a buy entry in this area over here. But it's often buying into resistance, selling into support, and it does that with its, tight stop losses and getting in and out. So just of awareness, discretionary, you got to give it room. It's this green line that I'm highlighting above here, a breakout above there, that sends the opportunity over here for us to be resuming out of this correction, of this pullback. It's not even yet a correction, I don't think, because it's, 15% on Bitcoin in a bull market. That's nothing more than a little bit of a pullback, 16%. So far looking good and healthy. At the same time, if we're rejected in this area, whether it's this green line over here or this confluence right above us, at that point in time, it is a matter of whether or not we come back down and test and take out that low or not. If we do, at that point, the structure over here becomes very bearish on taking out that lower low. And that probably means that not only are we coming down to touch 25,200, but probably lower than that. So, well, that's where the situation we're in. So that's discretionary. And this was a counter trend trade. Nevertheless, that was the opening that we looked for. That was the opening that we're playing through and continue to manage. CTM 2.0 continues to be over here since the 6th of May in a super position of power out of the market. Don't forget, we are a lot closer to taking buy entries on the 8-hour if the market in that uptrend that it is continues to resume out of it than being looking to attack to the short side yet. That momentum needs to roll over before we have any interest in attacking to the downside. On Ethereum, it's very much the same. Out of the market since the same exact time. This is going on, 8 days now, I believe. And just neutral, but getting very close here to begin attacking to the upside. You can see right now in 7 hours from now, if we close above, let's call it 1,800 and $63, we will be looking to take a poke at the buy side and a resumption upwards. Let's take a discretionary look at what's going on Ethereum as well. And Ethereum right now, you can see is into an area of resistance, right? When I say that, I don't know if you could see it or not. So I have the red line sloping down, right? That comes initially from over here. Me connecting these two, this area of PA gently sloping down into that one touch over there. And then you can see by me lowering it down, it continues to show me that's where the market is currently finding resistance, right? So, and then I have over here off the bottom, you can see this trend line over here that I took, right? And I just cloned that up, and then you can see these little resistance that the market's forming over here. So we have a confluence of resistance right above us. What price is that coming in just above there? I just talked about 1863. It's kind of neat that CTM 2.0 will be looking to take that buy if those two resistances are claimed. Really neat how that works. Now, even though I'm just looking at these two touches for that resistance of that white line, that lighter line, they still come over here, and you'll see throughout that makes up the market structure, and will over here, and will also up here. Look, even the nice two touches. but we're only focusing on what's in front of us. So I'm looking here on the upside, here on the downside. By the way, breaking down below here, if we're rejected here and roll over, there's still then resistance even coming off of here. And you can see those touches then lining up neat with there. But I'm just focusing on what's in front of me. Big bull flag. So yeah. So Michelle, I'm going to start here with this is Bitcoin. I got off Ethereum. So that looks like a nicely shaped and neat bull flag that we're in. You pointed out on the NASDAQ going back a couple of weeks ago over here, the bull flag that they faked below it. It didn't close below it on the daily. And I have to say that bull flag was appropriately pointed out. Not easy to manage in that you broke out to the upside and came back down, right? Not easy to manage at all. And that's what a slow grind would look like anyway. Slow grinds could wear a lot of people out, and markets that are moving, in my opinion, expanding, whether the volatility is going to the upside and or downside, doesn't matter. They're a lot easier to trade than a market that's grinding. So the earlier that you're able to determine that you are in a grinding market, the easier it's going to be. Tomorrow, we're going to be looking a lot about potential Bitcoin upside options. And we still have a little bit of time before that would come into play. And does this also look like a bull flag? I think so. The way I just drew it could be a bull flag. Do both of these also look like a wedge? Right? I can make the wedge case on it doesn't matter. But whether it's a wedge or a bull flag, it's this trend line over here that matters if we're going to get any upside continuation out of it. And that's what's kind of neat about trend lines, right? You don't have to figure out, if it's the neckline of a head and shoulder. You don't have to worry if it's, any type of wedge or bull flag. It's the outermost trend line over here, providing the resistance that triggers whichever it may be. We talked about Friday, we got a summit team meeting. By the way, Michelle, please send me a private message. I know that you have been a recent addition to the dev team. I want to make sure that you have the ability to lean in on that meeting. And the agenda for the meeting will be tied up today and tomorrow. Get that in front of Andrew by tomorrow afternoon, and then we'll get it out to everyone by the end of the week. And then after we get to ahead and meet that, we'll go ahead and upload that to CTM Core and upload that to CTM so they could see the direction that the summit team is looking to go ahead and be working towards continuing. Cardano is on the 8 hours, still holding a short position. Let's take a look at that over here as they're ticking up over here a little bit. Currently holding a short position, minus 1% into profit. You can see that red line over there. That red line crossing above the zero would call for an exit of the trade. Even though the stop loss here is 20%, you could see the average trade. Let me just come back and look at from a time of some history, so we get a little bit of data in here, and I could show you the average losing trade is 2.6%. So even though the safety stop loss is 20%, you could see that the average losing trade is 2.6%. The largest losing trade is 12.8%. And Cardano holding that trade. And if we see any upside momentum over here, if we do, you will see Cardano kick off that trade, get out of that trade. And then the beautiful dance will continue as it is right now with Bitcoin out of the market, Ethereum out of the market, and Cardano head short over here. That could let go of that position, get neutral. Ethereum would be the first to attack on the upside, followed by, it looks like, Bitcoin before Cardano would be. Ethereum on the short side on the daily continues to hold its short, currently 3% into profit, while both Bitcoin and Cardano remain out of the market. And then I wanted to talk to you about FNGU, but not here on the buy side. Because by the way, just took another, it's been a monster, as FANG in 2023 have been monster to the upside. The gains here on FNGU have been tremendous, up now 100%, and now entering the market long again. What I wanted to talk about would be downside expectations if the market were to roll over in any type of pre-panic, causing some type of drama for the politicians to go ahead and work this out. Now, if that's occurring, and imagine that you were seeing buy entries on FNGD, which is the inverse. So when the market's expected to be coming off over here, this is when you would see trades opening up on FNGD. Now, I just want to point out expectations on the downside. If I go back all the way to 2020 on the short side, it's like a 75% gain. If I show you what the gain was like in 2022, which was 2022 bear market in the equities, right? Bear market. So this was good for FNGD, 134%. I view this more as a hedge. That's the way that I view it. And I just want to bring that insight into you. Look back, if I go since 2020, 70%. And in 2023 over here, you could say, well, it hasn't taken any trades. So I didn't mean to do that. I thought it was the SQQQ that's off 4% in 2023. If we have any downside, the way that I view it is as protection, as a hedge. Now, if you look at the return of FNGU, not in 2023, which is spectacular, but since like 2020, and you're like, wow, that's a great return. And adding in that little upside on FNGD, which we saw as 70%, that then takes this and massively increases the return because of that compounding effect. That's why some people look to view those together. What do we got? We got a little light on the likes. If you enjoyed this session today as we kick off the week, if you're watching this on the replay, add a little love, help support the channel, hit that like button. All right, so tomorrow we'll be looking at and hoping that we set up what would be a upside breakout over here, right? And a continuation over here. We'll be looking at some potential upside. Now, that does not at all by any means, shape, or form discount the cautious outlook that I believe is warranted in this macro climate. We are looking at, again, it is possible that they've been able to engineer a soft landing. I think that we are in a spot that calls for caution, and I think that it is more likely going forward that we can run into a situation where things get dicey. At the same time, if we still keep taking out levels, right? Then we got one important repair, two important repair, trend line not breaking. And if we're able to get above the green line, look, we got to keep staying with it and in front of it. Same thing on the S&P 500 over here, consolidating underneath the resistance. That resistance gives way. It could open up further upside. There's a lot of cash on the sidelines. There's a lot of people that are cautious. They might have to chase. There's also, we talked about that massive quote unquote smart money or hedge funds position to the short side. If the tape keeps rising at one point or another, they're going to need to begin covering. That covering could be into even the top of a move. Market likes to hurt most people. It can. You could see on a break of 4,200, a cascade of covering taking us above the August high. And then maybe that traps a lot of people. I don't know. There's nothing easy about it, which is why we'll keep in front of it. I hope you enjoyed this session. I know I did. Everyone have a beautiful day. God bless you, and I'll talk to you soon.